My perspective is that for climate in particular, the trajectory is still going up, but the fundamentals are different now than they were a decade ago. Unfortunately, climate impacts are real and they're affecting everyday lives, and they're also hitting the bottom line in a way that cannot be ignored.
Welcome to ClimateTech with Kentaro, a brand new podcast from Persefoni. I'm your host, Kentaro Kawamori. On this podcast, I invite the brightest minds and most influential voices in climate tech. I talk to guests about everything from entrepreneurship and investments to all the cool and badass innovations that are developing in the space. In each episode, I bring you conversations with founders, investors, journalists, influencers, and all-around innovators who not only have deep expertise in climate tech, but also have an undeniable passion for solving the climate crisis through technology. I'm thrilled to kick off our podcast with a friend, fellow board member, and an OG climate investor who's one of the best in the game, Victoria Beasley. Victoria went from a small town in North Carolina, where she came from a family of hog farmers, to making a name in climate tech investment. But before she set on a path in venture capital, Victoria started her career in investment banking.
In the early days of the U.S. solar manufacturing space, a company called Suniva that was backed by a number of top venture firms and private equity groups. We raised, while I was there, over $100 million in venture funding, rode the wave up, rode a bumpy wave down, back up again, back down again, affectionately known as the solar coaster.
After riding the solar coaster, Victoria ultimately found herself working as a partner at Prelude Ventures.
Prelude Ventures, we are a San Francisco-based venture firm. We invest in early stage companies exclusively in climate. So we got started around 2013. So we're one of the original climate investors. And from day one, we had a climate focus. Back then, not a lot of capital in the space, a lot of naysayers, they're kind of in a boom and bust. And our belief was that, in the long term, there was going to be a need not only for climate solutions for the sake of solving climate change, but also we thought there's going to be room to make a lot of money, just to be clear. And so fast forward to today, we have made over 60 investments in climate. We have a very specific mandate, but I would say a very wide aperture in terms of sectors. So certainly energy, all things energy, storage, efficiency, finance, et cetera. But beyond that, mobility and transportation, food and agriculture, materials, advanced computing, carbon markets, and the list kind of goes on from there. My perspective is that climate is everything. It's a massive challenge and a massive opportunity. And so from day one, we've challenged ourselves to think about, is this climate? Where else in the economy do we need to decarbonize? Where might there be opportunities to do so? So it has served us well so far, and it has made for a really interesting set of investments.
Well, I think by now, I consider you in the rare class of unicorn VCs that has operating experience specifically at the early stage in the subject matter which you invest in. Crazy how rare that is today, right? As we've seen VC as an asset class expand so rapidly and so massively. And, your fellow investors broadly across the industry are mostly dominated by former private equity and bankers now. So I've always found that, just an amazing set of experience you have going from banking into early stage operating and now early stage investing. So super cool. I'd also be really remiss if I didn't mention my little learning journey on hog farming. As you know, I'm always mired deeply into emission factor sets, these big data sets which tell you what the carbon intensity of a specific unit of measure is. And my favorite one of the last couple of years has been emission factor sets related to the practice of animal husbandry, and specifically swine husbandry in the agricultural sector.
There you go.
It's amazing, the crazy sources of emissions out there and how high they are and the data that we have around those things.
I love it.
I bet you probably weren't thinking about that growing up in North Carolina on the farm.
I wasn't, but your point is well taken. And it goes to the conversations we've had and to what you're seeing at Persefoni. Climate is everything. It is the hog farm lagoons. It is, protein displacement and what we eat every day. It's how we get around. It's, what we do with our garbage, and the list goes on and on. So I love it.
So, one of the other things you mentioned was, you got your start in this in 2013, arguably earlier, right? You called it the solar coaster, which I'd never heard. Love that. You're legitimately a climate tech OG, right? Like I guess almost 9 years into this, the amount of firms that made it through at the time, clean tech, it wasn't climate tech. It wasn't even clean tech before that. I mean, 2013 was like the darkness of climate tech. You didn't even call it climate tech, but would love to hear just a little bit more about, your journey coming in way ahead of the curve before ESG investing in climate tech took off over the last couple of years, maybe even just the last year. Tell us a little bit about that journey and kind of what you've learned and how you've seen the sector and the investment space evolve.
Yeah, I love that question, and I think there's a lot to that. I think there are headlines that have stuck in folks' memories. Solyndra being one that can be late night fodder for sure.
In case you're not familiar, Solyndra was a much hyped solar panel startup that was founded in 2005 and is often lauded as the poster child for clean tech 1.0 investment failures. It raised over $1 billion from investors and obtained a $535 million loan from the Obama administration, which at the time was through some pretty innovative loan programs that the administration had created through the Department of Energy. Just a few years later, the company filed for bankruptcy in 2011.
But the reality is there were a lot of great companies that came out of that era. And I think certainly we're in a new phase now in terms of pace of investment and just number of companies. But even back then, our perspective was that we were going to take a long horizon view. It may be paradoxical because climate change is an urgent problem to solve. It's a decade more urgent now than it was then. But our perspective was particularly around hard tech, although I can argue that the same is true for software approaches, that entrepreneurs needed a capital base that were willing and believed in the time that it would take to develop technology, iterate on it, get it into manufacturing, deal with regulatory opportunities as they were needed, et cetera. And so we really took the belief at an early stage, and it comes in part from our LP base, which I can talk about for a minute too. But we really took the belief that there was no question that this was going to be a massive opportunity. The question back then was, could it be a massive opportunity to make a lot of money on venture horizon in terms of timeline? And so what we've seen since then is that, the answer is yes, it is a massive opportunity. You can make money on venture timelines. Different data sets will say different things, but 7 to 10 years is not unusual. And it's actually not that different for a hardware company. I think that's one of the realizations that folks have had over time. So, in a lot of ways, our perspective hasn't changed, that we still need these solutions. We're still here for the long term. We still believe that great entrepreneurs are out there. And, thankfully, gratefully, I think a lot of folks, be it consumers, on through to regulators and shareholders, have a more nuanced understanding now of climate and have, I think, a greater sense of urgency. And certainly, the challenge itself has never been larger, which means that there's opportunity from our perspective.
So we'll pull on a string that you laid down there, which is your LP base. Of course, I know who that is. Our listeners don't, but to your point of being able to be very forward-looking, be ahead of the curve, and quite frankly, probably have an appetite for a risk profile that's a little bit different than your average, third-party fund. Tell us a little bit about that, how that's sort of influenced the team and the journey.
Sure.
I think that's definitely a blessing from my perspective because it's enabled you to do things that others haven't. And yeah, we'd love to learn more about that.
Yeah, sure. So our LPs, we invest on behalf of the Simons family. They are very quiet, but very, very active philanthropists, primarily on climate issues, as they're members of the Giving Pledge, for example, as well as very successful hedge fund managers in their own right. And so their perspective, very much coming, from a financing orientation, is similar to what I just described. It informs what I just described, which is this is a massive opportunity. And so our perspective back in 2013 was there's a gap in the market. There's a gap in terms of the impact that needs to be had, but there's also a gap in terms of, the money that can be made. And I personally believe that there is a need for all parts of the spectrum in terms of capital in this space. I think really impact oriented is needed. I think, more scale oriented capital is needed too. We fall on the end of the spectrum where we believe that in order to solve climate, we've got to get solutions to scale. And in order to get solutions to scale, you have to build big, successful, profitable businesses that, treat folks well and take into account externalities and everything else, but fundamentally have to be good businesses. And I think that ethos comes, in large part from the Simons family, who have been tremendous supporters and catalysts behind what we do and so much more.
That's awesome. And for those of you that don't know, the Simons family, incredibly successful group of entrepreneurs, really some of the earliest, and I guess you could even argue maybe the inventors of quantitative trading strategies through Renaissance Technologies and the Meritage Group later on. So, wow. Yeah, pretty amazing, what that can do when you have the right investor base, right? That's true for, as a founder, certainly in the startup world, any company is only as flexible and as long-weighted as its investor base allows it to be. But it sounds like you have a lot of freedom and genuine long-term weighted sort of capital base.
We do. Really, really fortunate to have them.
Let's talk about the venture market broadly. So you and I first met, it was probably been less than a year at this point. So
That's right.
It hasn't been very long. It feels like it's been ages in the best of ways. 2020 sets VC records. The data's just come out. 2021 doubled the highest year of VC funding on record. So in the span of the pandemic hitting, we see venture capital completely seize up for 3 months. Then we see record deal flow in a short amount of time. Then we see that double into last year. What are your thoughts on that, right? I mean, you've seen now the venture market mature into a whole different asset class, I would say. But, what do you think about this just record amounts of dry powder in the capital markets broadly, but specifically in climate, related to like the latest PwC ClimateTech report that came out that showed, I think it was like 10% of all VC funding went to climate tech last year. What are your thoughts on that?
Yeah. If I think about it from an entrepreneur's perspective, it's a great time to be taking a risk and, leaving your day job and starting a new company. It's a great time to be, leaning forward on your vision and trying to accelerate your execution. It's a hard time to be hiring, but I'd argue in climate, it's a great time to be hiring as folks, whether you call it the great resignation or the great reassessment, sort of look and say, what do I want to spend my one and only life on? And I think for many folks, it's a new answer for them in climate. But I would say it's a really great time to be an entrepreneur. And I can't help but be excited for the entrepreneurs, even as we in the venture industry, and particularly in climate, often scratch our heads and have some frustration about valuation, inflation, and to your point, just the sheer volume of dollars that are coming into the asset class and in particular into climate. My encouragement is always anybody who thinks they might want to start something, go do it. But I think especially right now, it's a great time. And frankly, climate needs a lot more companies getting started. To our earlier point about climate is everything, it's true. And we need more opportunities to solve the grand challenge. And so my belief, both sort of theoretically, but then also on a really practical basis with our companies, is that there's an especially unique opportunity right now in venture and in climate in particular for those parties, those communities of kind of folks who've been at it for a while and folks who are new to the space to come together and add differentiated value to companies and support them in ways that is richer, is more nuanced, is better resourced, et cetera. So that's my hope. And I'm certainly seeing it. The cynical side might be like, gosh, more competition, higher valuations, et cetera. But again, with the perspective of the long term and the perspective of solving climate, I think there's a really exciting moment in time now that the broader dynamics in the venture asset class are facilitating.
Do you think we're going to see another Solyndra type debacle of a company that's, massively overvalued, which there's a lot of VCs talking about this. I think others are capitulating and just, playing the game that's on the field, as they like to say. But How do you think about that, right?
Yeah. My perspective is that for climate in particular, the trajectory is still going up. The thing that's different now, fundamental, there are a lot of things that are different, but the fundamentals are different now than they were a decade ago. And by that, I mean, you have regulators who care differently about climate right now. And certainly Persefoni is, seeing how that shows up. You have corporates that care, whether from shareholder pressure or consumer demand, et cetera. To that point, consumers care a lot more and are much more educated and sophisticated on issues like climate change. And they expect that their dollars are going to reflect that. And also, unfortunately, climate impacts are real and they're affecting everyday lives. And they're also hitting the bottom line in a way that, cannot be ignored. And so, I think there will be some volatility even in the private markets, but my general perspective is that, the trajectory is up and to the right for all of those reasons.
I think so too. I think it's going to be really interesting to see. Let's talk a little bit about your favorite and best investment successes. So tell me about, some of just your best investments and then some of your favorite investments, which aren't always the same. Love to hear a little bit about those.
Yeah. I'm not going to be able to pick favorites. It's like picking favorite
Okay.
children.
All right, fine. Let's keep it as quantitative as possible. Your best return. That's true. That was a very unfair question. I should have known better to ask that.
No, it's great. Let me tell you about a few that I think are particularly interesting at this moment in time. One is a company called Meaty. Meaty is in the food space. They are producing a new whole food made from nutrient-dense root structure of mushrooms. What's really interesting and compelling, and I can go into more of the technical details, but ultimately the product is, first of all, delicious, which is important, but also it's a very, very short ingredient list with a complete protein, high fiber, and a high micronutrient content. So you don't see that on the market today. And part of my thesis, and this, is not to knock other companies that are out and have been out earlier in the plant-based category. I think those are great. And I've been delighted to see consumer uptake. But my perspective is that folks, consumers generally, are trending towards wanting whole food that they can read the labels on, food that is nutritionally complete and that tastes delicious. And so Meaty checks all of those boxes. This is a great example where you have mycelium as an underutilized nutrition source coming to the market in a really compelling way.
Victoria just mentioned mycelium. If you're wondering what that is, it's the fungus mushrooms are made of. It's been used to produce everything from plastics to leather and even plant-based meats. More recently, mycelia-based startups are getting a lot of love from venture capitalists.
It's an incredibly flexible scaffolding, if you will. We can and have made delicious beef for beef stew. We've made fish for fish and chips. We've made deli meat. We've made, the list goes on, which is amazing. Again, when you point back to not only the ease of production, but importantly, the very short list of ingredients and the very high nutrition content of the plant. Of the mushroom. Technically, people talk about it as plant-based. It's not, mushrooms aren't plants, but really delicious product that I'm excited for you to get to try sometime soon.
So basically you're at the forefront of mycelium-based foods, which is amazing. It just happens to be one of my favorite food categories.
There you go.
It's funny you mentioned that the food labels. As you know, I grew up in Germany in a small town, and the concept of having to look at a food label of what is in your food was so alien to me when I first moved to the States when I was 13. Because we got our bread at the local baker, we got our meat at the local butcher, we got our cheese from the local dairy farm. And God, I'm so excited for more plant-based and now mycelium-based foods to come available that actually taste good. So I don't have to worry about, who was mistreated poorly or what the hell is in this thing. So that's really cool.
Yeah.
Also a great.
So that's one.
Oh, let's hear the next. You got another one.
No. The other company that came to mind, again, I don't pick favorites, but super interesting and doing really well. It's a company called Trove. The founder there is Andy Rubin, who was Walmart's first sustainability chief. He is definitely one of the climate OGs. Trove partners with brands and retailers to allow them to own their own resale platform. So if you think about, resale, which until I really started looking in the space, I did not appreciate just how massive it was when I invested and how quickly it's growing. It's grown since then. But, you think of eBay, but you also think of The RealReal and Poshmark, and the list goes on, doing massive, massive volumes of resale, either mostly on a peer-to-peer basis. When you stop and think about what that means for a brand or retailer, let's take, Patagonia as an example, one of our early customers. Patagonia spends a lot of money, resources, and energy developing their products, designing them, manufacturing them, transporting them, marketing them, etc. And then somebody else gets to take a second, third, fourth bite at the apple, with Patagonia getting none of that. And so Trove came into the market and allowed for these brands and retailers who actually aren't set up to be able to do re-commerce, to be able to participate in this massive and, again, very fast growing market. So Trove's customers include Patagonia, as I mentioned, but also Lululemon, REI, a list of others, and a few very exciting announcements coming in the next couple of months. So, and Andy, this goes back to our long horizon orientation conversation earlier. Andy was really a visionary and really believed that the tailwinds were coming, both on the consumer front and with brands and retailers. And frankly, it took a while for folks to get conviction. There's always something else, some other fire to be put out, some other initiative to be had. And what's happened is, both shareholders, but also very importantly, consumers are now demanding, as they've gotten more educated, that their choices that, live in their closet reflect their values. And it's uncomfortable to reckon with, but when you look at the carbon intensity of the retail and apparel supply chains, it's not pretty. And so anything we can do to get more uses out of a piece of clothing, not to mention the economic benefit to both the seller and the buyer to be able to transact on that, is impressive. But it requires a technology and a business model that allows that to happen in a way that's accretive for all parties. And that's what Trove has cracked.
Yeah, you're right. I mean, the scale, in textiles and retail, the problem of waste is crazy. It was exciting for us about a week ago. We brought on a new client, Fortune 500 retailer, huge footprint on clothing, it's like $2 billion a year in revenue. I mean, the amount of clothes that is astounding. And seeing that company, it's trading in the public markets, investing into understanding their footprint and reducing it. Talk about a sign of the times. It's a low margin business. They traditionally would not have invested into something like this. But I love the Trove example too, because it immediately made me think of, you mentioned early on in the conversation, the changing consumer behavior, right? And 10 years ago, there was only one player in the space, and it was Buffalo Exchange. And it was, I walk into this local boutique of people that have just sold their clothes here. Nobody was thinking about sustainability or climate impact of that business model. Buffalo Exchange definitely wasn't, right? It was just about taking this inventory of stuff that people didn't want and reselling it, just called secondhand clothing. And it's amazing, right? I think that might be one of the best examples. In 10 years, secondhand clothing has become part of the circular economy. And you've got companies forming around this that used to just be, oh, why are you wearing secondhand clothing? And now it's becoming a point of pride, right? You can show that you're making responsible decisions and investing with companies making a difference. So that's pretty exciting.
Totally. I think in a lot of communities, there's I'll use an analog, which is it's going to be a little awkward to still be driving a gas powered car. Like if you're in the parking lot and you walk out with a friend or a colleague or a client, and you get into your gasoline powered car and they get into their electric car, at some point that's going to be a little awkward if it's not already. And I think it's not out of question to think that there's going to be a reflection of that in other industries, including apparel. And that's not to say that it needs to be a point of shame or a point of embarrassment. I think that the great thing is, whether it's in EVs or with circularity with Trove, there are some really cool attributes that come with being able to wear, whether it's vintage clothing, but even just, being able to brag and feel great about the fact that you got a basically new pair of, Lululemon leggings, if that's your go-to, Kentaro, for a much lower price and with a carbon footprint that's dramatically reduced. That's pretty cool.
I mean, you know me, I'm always just wearing athleisure yoga wear, even in the boardroom. It's the best place to wear that. Let's go to our last topic. And it's a tough one because we'll see how closely you play your cards to the chest, which is tantamount to your success as an investor in spotting trends early. But tell us about an exciting early trend broadly across climate tech that you're tracking, why you're excited about it. Love to hear what you're looking at.
Yeah, that's a great question. There's this really interesting political cartoon that Vanity Fair ran in April of 1861, which was just a week after the start of the Civil War. And you can look it up, but the cartoon is an illustration of whales celebrating the discovery of oil and the possibility of diminished demand for whale oil. Obviously, there's a ton of irony in that as we fast forward to today, and the ways in which whales and other species are being impacted by the burning of fossil fuels. But I think there are a few lessons there for me. One is that fossil fuels are amazing. Like the fact that we can gather, we can distribute, we can combust ancient plants and animals and do really productive things with that. Like, sure, I hate on oil and gas. I'm a climate person. But when I step back and think about the marvel that was the technology and the business model innovation and the supply chain, everything else is really amazing. And so when I think about that and translate to today, I try to keep in mind, what that we're doing today. Do we need to be mindful of where do we need to be mindful of the externalities? And I think I'm spending a lot of time right now thinking about, where are there opportunities, for example, for circularity. One of our portfolio companies, AMP Robotics, uses machine vision and robots to help sort through waste streams, to make recycling more economically viable, and to help to improve the purity of waste streams, for example. Other companies in the space include Redwood Materials, which has announced very large contracts with very large lithium battery suppliers. And so I think we're going to see more in this space. For a long time, it was sort of the recycling piece in particular was naysayed for a whole bunch of reasons. But I think for the reasons we've talked about and more, there's going to be some innovation here that, especially when you think about the scale of these industries, is going to be really, really impressive.
Great. And I want to make sure we get a chance to unequivocally clarify the record because you said the words fossil fuels are amazing. And I know the context of which you said that. And I know that was in the same way that the atomic bomb was amazing. By definition, right? The definition being startlingly impressive, but at the same time devastating, right? And
absolutely devastating.
Yeah, I mean, hey, great time for. I'll just put my opinion on the record, right? I think the two greatest innovations of humankind in the last 150 years are modern finance and portable energy. To your point, right? So I think agree, disagree. That way we've got it captured. But
thank you for the
there's
clarification.
No question in my mind.
I very much want to get off fossil fuels.
We don't want you to end up a soundbite. We don't want that,
No,
right?
We do not.
We have to get off of fossil
fuels. I spent my
fuels.
whole career getting away from fossil fuels, but we got to learn from where innovation has happened in the past, and I think it's important to be clear-eyed.
I actually got asked this question so many times at COP26. I just developed just a quick fire way that I could tell people my position on fossil fuels. Here it is. Fossil fuels, super critical to the modern economy? Absolutely. Fossil fuels, do they need to go away over the next however many years? Yes, as soon as possible. Should we stop subsidizing them? 100%. Should there be people that should be in jail for trying to cover up the scientific fact of climate change at big oil companies? Unequivocally. But that's the reality we live in, right? It's a very pragmatic approach that I think you and I share, which is fossil fuels are critical to life today. They're critical to providing, the conveniences and the quality of life to many people around the world. But that doesn't mean we should be continuously, aggressively investing into advancing that. That cash should be going to renewable energy.
Yep, totally agree. maybe I'll give you one more example that maybe is a little more lighthearted, and something that, I personally think about. As you know, I have a toddler at home. And so our, both because of that and because of the pandemic, the number of boxes being delivered to our door is embarrassing at times. The related thesis that I wouldn't even call it a thesis, but an area I'm thinking a lot about is the issue of returns. Over the holidays, an order I placed, it was the first time I'd seen this. And I can't remember which retailer it was, but at the bottom, right before I hit place order, there was a blurb that said, hey, returns are free for you, but they're not free for the planet. Let me help you think through whether or not, you got the right size or whatever it was. And it was a bit of a gut punch because, I think about it. I think about like the carbon related to the reverse logistics piece. Obviously, some of my investments are very much right in this wheelhouse. And yet here I am as a consumer, like, doing what we do, which is, you get things, especially in a moment where you're in a hurry or, you need something for your kid and you don't know what size they are. You don't necessarily think about the implications of returns. And so I don't necessarily know what the solution is, but I guess this is a call to entrepreneurs. And there are some really interesting early stage companies that are working at this. So, a little bit more accessible topic that I think about, but it's one that when you look at the numbers, it's pretty staggering, and something that, as I said, as a consumer myself, I've tried to pay a little bit more attention to.
I would be shocked if anybody listening to this didn't live that exact problem, at minimum on a weekly basis, but probably for most of us on a daily basis. It's shocking that nobody has solved this. And to your point on making sure that we have returns, let me just be clear. In my instance, if I stopped making returns on having the wrong size Lululemon pants and you started seeing me rolling around in a schmedium, that would be a public disservice to everyone. So returns are critical for everyone in this scenario.
Bring it full circle.
Well, look, you've been a great sport. I really appreciate the time you coming on. We'll do this again sometime, and we'll catch you on the next one.
Thanks, Kentaro. Really appreciate you having me.
Well, I hope you enjoyed listening to my conversation with Victoria as much as I enjoyed having it. If you want to get in touch with her, you can reach out to her on LinkedIn or by email. We've shared her contact info in the show notes. But before we go, please don't forget to subscribe to ClimateTech with Kentaro on whatever podcast platform you listen to. It would also be awesome if you could rate us and leave us a review. Thanks all for listening, and I'll catch you on our next episode. ClimateTech with Kentaro is produced by our incredible team at Persefoni and Hueman Group Media. Our theme music is by Guest House. And if you want to learn more about Persefoni and our climate management and accounting platform, please visit our website at persefoni.com.